Good morning. It's 6:33 a.m. on Wall Street, 3 hours before the open of trading. It's time to get your global macro on. Welcome to QuantBox Live, where we uncover the best fundamental investment opportunities across the global globe. How do we do that? Our AI-driven data analysis of sentiment, inflation, employment, GDP, technical analysis, open trade positioning, seasonality, and a lot more than that uncovers these opportunities. My name is Wayne McDonald. I will be your guide today. I'm also the founder. I'm, as they call, a real economist. Nice. I have a degree behind me. One of those says economics on it. Sweet. Cool. And so I created QuantBox to automate the process of doing my research. Smart, right? I know. Yeah, good. Yeah. Cool. So now the cool thing is we make our decisions based on fundamental analysis of macroeconomic data, actual facts. For example, when you look at the Commitment of Traders report, those are facts. That's the number of contracts long, the number of contracts short. So now you know where your institutional money is positioned. Maybe you want to trade with it. I don't know. Just saying, maybe. So, anyways, if you're watching this on YouTube, you're watching it many, many hours delayed. Very often I forget to put it on YouTube. So you might not get a video at all. Why don't you remedy this and visit quantbox.co? Start, I suppose, with a $8 trial and see how quickly you fall in love with all the pretty colors. What does it all mean, Basil? Okay. Yeah, very cool. So anyways, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. I just realized I'm drinking out of a Harvard cup, a crimson shirt, crimson sweater vest, and I even have crimson shoes. Uh-oh. It's going to be one of those days. How did that happen? Anyways, guess it's Harvard Day. All right. So let's lock into the DB on the Google Cloud, the QBDB, QuantBox database. Let me expand this. All right. Yield still at 4.7. A few days ago, it was down to 4.6. Okay. So, all right. So money has gone in and money has come out. All right. But stable, maybe? I don't know. Maybe this is a new trend. Okay. This was as low as 4.55. Remember, lower yields means people are investing into bonds. Yeah. Oil's up a bit, not much. Gold, 1936. Yeah. 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 That's a big number. If you've forgotten, about a week and a half ago, we were at 1,800. Well, about. So, yeah, it's gone up a bit. S&P 500 had a good day and is up again. Nice. Okay. Remember, everybody benefits on the way up and almost nobody benefits on the way down. So I'm not thinking about my money. I'm thinking about you. I'm so happy for you that the stock market went up. All right, I'm a little bit happy for me. But nonetheless, everybody benefits on the way up. So I cheer. Yay. Euro buck flat, but look at that 105. It was 1010. Now it's 105. Are we on our way back down to parity? We'll see, but this tends to go up just simply because the dollar is weak. And the dollar is weak is typically because there's risk on. And when there's risk on, S&P 500 tends to go up. And so does Bitcoin because they're priced in dollar. Bitcoin priced in dollars. Euros priced in dollars. Oil, gold, priced in dollars. Okay. Yen still having the best scores. Look at this USD yen. Okay. Pound dollar, your Aussie dollar, euro dollar, Kiwi dollar. Okay. Down, 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 down. The thing is, we're in the time of year where we kind of rotate out of that trend. Maybe not economically, but you'll see like maybe some seasonality will shift. But nonetheless, those are the things that you should be eyeballing closely, right? So sometimes people say, "Well, do you want to look at the Kiwi South African rand or something like that?" I'm like, "No, no, I don't. Why? Why would I do that? We have such amazing opportunities right here in our face. Why would I want to look at that?" Oh, I don't know. Okay, but anyways, there are so many opportunities that it's hard to focus, isn't it? QuantBox is trying to help us focus a little bit. All right, so we went from some risk on and we've lost it recently. Okay. Remember, it was neutral, neutral, and slightly risk off. Anyways, a little bit of risk off back into the narrative yesterday. So we got to pay attention to that. Okay. Yen over the week, very is slightly strong. Yields going back up. Oh, that's not good. Because remember, we were at 4.55. So yields are creeping back up. Gold. Okay. Gold is up a bit. Dollars ever so slightly stronger. S&P 500, not strong enough. VIX volatility is increasing. So you can see it's like mm, it's neither here nor there, but it can tilt one way or the other pretty quickly. And of course, that's probably going to happen today. All right. Look at the scatter plot. Bitcoin way up. Now it spiked, it dropped, and now it's trying to climb back up. So this isn't even the full picture. If you looked at the spike yesterday, it went up a bajillion, and 3 hours later was right back to where it started. Gave back a bajillion. Now it's trying to go back up. So 3% doesn't really describe what's happened recently. That's an outlier, so we'll get rid of it. That'll give us a better view. The biggest ups: Japanese stock market, US stock market. Nice. Nice. Because that is risk on. Cool. And everything else is a little bit of a mixed bag. Okay. Now, I thought we'd have much better risk on since Joe Biden's going to solve our problems in the Middle East tomorrow. It's going to be great. Now, I say it jokingly, but what actually bothers me is what would set up a move like that? Why would you do that? Why would you tell everybody first? Doesn't actually make sense, but it does make sense if you don't know what's going on behind the scenes. So then I think about what would lead to that. And they must have known, had intelligence that Hezbollah and Iran were going to make a move in the north. And they're like, well, not if Biden's coming. That would deter that. So, oh, well, that makes me worry because that would be very bad news if there's a two-front war and Iran's involved. Like, we talked about this a week ago. That's when it leads to nastiness. Okay. So, anyways, all right. So we'll buy some more time. We'll get a few more days. Get to the weekend maybe. So pay attention to that. Oil slightly up, gold slightly up. Look how small these numbers are. 0.05%, but gold is way up there at 0.16. Okay. The biggest losers when it comes to the stock market, 0.2, so pretty much flat. And you right, the FTSE is doing okay today, but these are some nice moves here, 1% more. So, anyways, it's still showing some risk on, but it really shows indecisiveness. We have some flows of capital that seem to be just purely seasonal, and others that are being infected uh, by geopolitical risks. So interesting. One thing you might want to do is remind yourself what you think normal is. So you start going through maybe assets that you're interested in trading, and I don't know, just we'll pick one, any asset, any right, pick an asset, any asset, and remind yourself what typically happens, and then compare and contrast that to the geopolitical risks. So one, let me show you an example. I just picked one. Let me get my drawing tool. I just picked one. So this is the FTSE, okay, and you can see June, July, August, September are all generally down periods, and then somewhere around September, October, it goes this way, right? And the reality, what is actually happening is it did fall and it turned up a little early. But it seems to me normality in a normal world, what normally happens, the last 5 years, October hasn't been that great for for the FTSE. Um, but generally less up, nonetheless, then November tends to be a bullish month and December tends to be a bullish month. So if you're not sure like how you want to play it, always establish a base, if you will, a foundation of what m- m- what should happen, and then figure out how close or divergent what reality is bringing us. You can do this with anything. I just grabbed that randomly. Kiwi Swissy. How does this one play? Hmm, okay. July, August, September, and a big pop should last and then fizzle out in December. Yeah, it seems to be following course. So in this, excuse me, this coffee does this. In this period here, we have up from the previous period, and into the new period, we have more up. So you would, I suppose, expect something like this. But if that doesn't happen, remember this is flow probably into Swiss franc based on safe haven and geopolitical risk. So you want to isolate Swissy and be careful, or find things that tend to fall this time of year against Swissy, if there is such a thing. Man, this bone marrow gets stuck in my throat. Oh, huh? First world problems. Let's pick something that we probably prefer. There's Dixie on here. Bitcoin. Okay. Peaks in March, drops to down to Canada Day, and then somewhere how it goes like this, and then fizzles out, and then ends the year cool. You see, this year it's about a month off. So we're in a period where Bitcoin traditionally makes a high and then gives back. Kind of interesting, huh? That if Bitcoin peaks this month, very often it's the short term top. So we might want to look for that. So again, the reason I'm going through this, let me be clear, in a time of uncertainty, it's ideal to reaffirm what you believe normality is. Otherwise, you go mad because you get caught between trading a trend and then trading this geopolitical risk, and you get you know caught between them, and you get frustrated at both of them. So what I would do is pick one or the other. Are you going to trade the geopolitical risk? Or are you going to try to trade natural trends? And the clearer you are about what's normal, the better you'll trade the abnormal. So it's not like you have to choose. Like, are you buying Swiss franc because of capital flows out of the Middle East and into Swiss bank accounts? Is that going to be your theme right now? Or are you going to trade, like the stock market generally goes up this time of year? Are you just going to trade that normality as if there isn't any risk? Well, if you understand the base of the normal flow of capital around the world based on normal business activity, then you'll actually understand the abnormal even more. So, I would spend some time going through these assets and just framing a picture in your mind, maybe whittling down based on your seasonality, whittling down to some assets that you really think are historically good opportunities this time of year, and try to focus on that as well as the geopolitical risk. Just mentally try to understand both sides of the equation. And I think if you don't, you can get sort of frustrated with both. And that's never ideal. Okay. So play with some seasonality. Boop, boop, boop. So I've been hoping for dollar weakness. Ooh, maybe it's appearing. Maybe. Okay. It's hopeful. Remember, based on research provided by QuantBox Pro, there's 8 more weeks of dollar weakness. Maybe. In a time of geopolitical risk, that's usually not the case. All of a sudden, so I was really worried about a big spike in US dollar, and it's trying to come back around. Maybe the forces of normality overpower geopolitical risk. I don't know. We'll find out. Kiwi got really weak. Okay, pound is giving a lot back. Aussie, yeah, trying kind of. Euro going up, but as I've covered many times in the past, very often it's just an indication that dollar's weak. Okay. Okay. Yen weak, so that's risk on, and this is risk off. Swissy strong. But these moves are not great. So like we could pick up a Swissy here. And you know, I'm in a couple of mediocre trades here, but I'm short off of the 21 EMA. It hasn't really moved like over the last 24 hours. Not a lot has happened out of that. But there's the plan. Okay. And I'm in. And now the table is set, the candles are lit, the wine is poured, the music's playing. And right now, we got to let the night unfold. So Aussie Swissy down. Apparently, I should have done Kiwi Swissy. Yeah, well, right. Story of my life. Take it home. I drive all night. All right. Yeah. Anyways, how about that Kiwi Swissy? Maybe do it on a 4H. And the 4H brought us. Yeah. Noise. Once again, for those that are newer to trading, I will rub salt in the wound. Um, you're supposed to sell off the 21. So why didn't you do it? And you're like, but wait, it didn't touch the 21. We'll come back in 3 days and it will be. You got to shoot in front of the deer when it's running, right? So it's a moving target. Sometimes a trick that you can do, and I don't know if this will work, but very often you go to the zero lag, and I'll make it a fatty, and I'll say, see? And what the zero lag is trying to do is estimate, guesstimate, emulate where the 21 will be in the future. So 3 days from now, this moving average will continue to move right, but it'll also move down following the negative numbers in the red candles. So in 3 days, this moving average will be right here. And this is why when you go back through your charts, you see all these trades you missed. You're like, how come I keep missing these things? Because you're not looking at them correctly, right? You got to shoot in front of the moving deer. So maybe this zero lag, and that's a bit available on investorbootcamp.com. If you want it, it's there. And so yeah, I sold Aussie and it hasn't moved. How come it didn't move? I mean, come on. This one moves so beautifully. Uh-huh. Well, and the funny thing is I'm actually much more bearish on Kiwi based on their monetary policy. So anyways, my bad. I guess the setup didn't look the same. I don't know. But down nonetheless. Okay, of course, everything is moved except the one I'm on. But here's another one. Down, 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 up, up. We haven't hit the 4-hour 21 yet, but we will. And it's already Oscar Mike. Thank you to the zero lag moving average to give you a guesstimate of where this moving average will be in the future. By the way, that zero lag moving average normally costs $1,300, but it's on sale for $9.99. You can buy it right now. Oh, actually, no, it's included for free. But nice, right? Very important. Very helpful tool. Mm-hmm. Okay, and Euro strong. Definitely don't want to sell this one. Um, okay, so you can add a zero lag, insert indicators, custom, zero lag, make it a fatty, and get off daily, I suppose. And yeah, we're in a sell zone, sorta. Um, I'll rehash what I pointed out yesterday. Yesterday. Okay. What do you think? Was that important in the past? Well, if so, then this will this area here will be important in the future. Okay. Now remember, there's an extra level of danger on this pair because it's the main pair that the Swiss National Bank focuses on. There's a small chance. I don't think it'll happen because of why the Swiss franc is getting strong, geopolitical risks. But the stronger the Swiss franc gets, the more it hurts the Swiss National Bank. And they don't like it. But again, because it's geopolitical risk, um, I guess they'll just have to accept the strong Swissy as a way to support, even though they're neutral. Um, I think they would support Western Europe. You know, like for example, I don't think they're going to just suddenly buy a bunch of euro. Um, I mean, maybe they will. I don't know. So let's just put it on high alert. Who cares what I think? Um, The Swiss National Bank do not like the capital flow of Euro Swissy this way. They don't like it. So the more it does it, the more they might fight back and then just suddenly take a boatload of Swiss francs and just buy euro. And you can get one of these things where it goes like pop. But don't trade it like it's going to happen. Just realize that pair is more vulnerable than the others. But we're probably a million miles away from that. So, but that kind of looks like a bottom. So, what if we breach that, huh? Look, I can't zoom anymore. This is hard to see, but notice we hit this level, and like 3 days later, we're way up here. I mean, just was that the Swiss National Bank? Maybe. And kids, this should be in your history books. See, I can't even fit it. We dropped from 120, that's where the peg was by the Swiss National Bank. Then they removed the peg and we were at 85. Thousands and thousands and thousands and thousands of pips. And most of that occurred instantaneously. So what happened was, like, I had a account somewhere. I think it was FXCM. I had some account. I don't know why I had the account. It was probably just, I don't know, some leftover thing from a million years ago, but I had like one or two mini lots, right? Mini lots. And I was long here because the Swiss National Bank had told us that that's our line and that they were defending it. And so what happened is the next day all the accounts were frozen. You couldn't get into trades, you couldn't get out of trades, you couldn't cash out, you couldn't do nothing. But imagine being on two mini lots and you're down $4,000 or $8,000 on two mini lots. You're like, wait, what? I don't even have 8,000 in the account, right? Two mini lots, you're negative 8,000. You're like, that's impossible. Yeah. Okay. Anyways, funny, huh? Funny, huh? You think that's funny? Can you imagine, right? You imagine, with stop losses, by the way, right? With stop losses. Yeah, imagine literally, and I'm not even joking. Imagine the market dropped 4,000 pips in 1 minute and then froze. Some people couldn't even log into their account for 3, 4 months. And then they found out the broker went out of business. You're like, wow. Not Trader's Way, though. Trader's Way was perfectly fine. Yeah. Yeah, Brian's like, it was crazy. Honestly, it was actually crazy. It was. And you have to realize that I don't remember the date, but it was after the financial crisis. Maybe I should bring it back. Where is it? Yeah, quite a bit after. But anyways, it was after the great financial crisis. So sort of like in this period where major banks like Lehman Brothers went out of business. So not long after we faced this other crisis, and I remember calling buddies all around the world trying to figure out if banks are going out of business because I knew brokers were going out of business. But anyways, yeah, there's some history to that. If you don't know, now you know. You know. Here's an interesting one, and it's playing nicely, but we are up against support. But nonetheless, what I've been asking the forex gods is I've been asking them for Swiss franc strength and U.S. dollar weakness. Okay, not necessarily for me to sell this pair, but that's the combination I've been looking for. We had this identified. Okay, now it's come down, it's come up. There's your role reversal. Oscar Mike. Okay, cool. Brian's like, am I sensing something? No, 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 and completely different. Yeah, completely different scenario. So I guess let me go back to just therefore finish that thought. Um, all what we know is that the Swiss National Bank prefers a weak Swiss franc. We also know that it's strong right now, not out of normality, but out of abnormality. And I think the Swiss National Bank knows that. And so maybe they'll just live with the strength. But if they do need to fight back for whatever reason and devalue their currency, you'd get a steep pop in euro Swiss franc more than everything else, because the primary thing they would buy in an intervention moment would be buy euro. They would sell their Swiss franc to buy euro. And then with that in mind, it's just kind of interesting. I don't know if it's relevant, but that seems to be an important price. Does it mean anything? I don't know. Uh, if this is a long-term downtrend that we're going to have for a while, then it's just going to be an easy peasy lemon squeezy. We'll cut through that support like a hot knife through butter, and we just continue going this way. That's what a trend trader would say. And you would argue that based on the flow of capital because of the geopolitical risk, it would be normal. Um, okay, but there is a small chance that maybe that is relevant and that it's meaningful to the Swiss National Bank or something. We don't know, but it kind of looks like potential support to me. So I know it's hard to see because of all the gobbledygook analysis that we do. So you drop into a smaller time frame and you zoom in a little closer, and yeah. So what could happen? Okay, and then we get here. What happens here? I don't know. We got to pay attention. Sure know what I'm talking about? Yeah, and these big moves and these challenging exogenous shocks put brokers out of business. Just the ones that trade against their clients, though, because they don't have it planned, because you can't plan an exogenous shock. Can't plan a black swan. And brokers have gone out of business in the past many times. When I was in Chicago at a National Futures Association meeting, the president of the organization was speaking to us at lunch, and he was bragging about their policies and how no one ever lost money under their policies based on a failed institution. And I'm like, I got my hand up. I'm like, but over here, right in the middle of his speech, I'm like, hello, my name is Wayne McDonald. I'm a foreign exchange trader and a commodities trading advisor. And well, Refco went out of business about 4 years ago. And you regulated it because it's a futures, a futures merchant. And lots of forex traders lost money. Their accounts were frozen for 3, 4, 5, 6 months. Then the bank went into bankruptcy, and those traders lost their money. And he looked at me and he said, "Oh, that's just retail forex." The guy that regulates my business doesn't give a shit about me. So I grabbed right in front of there. I stood up. I grabbed all my stuff right in front of him, in front of a room of hundreds of people. I packed my stuff up, put my jacket on, turned around, and I walked right out the door, right in the middle of lunch. Couldn't believe it. But yes, so that was Refco went out of business, and boot campers had money at Refco. Then FXCM US went out of business during this one. It happens, you know. Oh, Brian said you meant could it happen on yen or other currencies where central bank is defending price? Well, yeah, yeah, yeah. I mean, central banks often intervene. Yeah, yeah. New Zealand is done it many times. I've traded New Zealand bank intervention. Oh man, it would have been 15 years ago, but probably 3 or 4 different occasions, probably 3 different occasions, meaning not just 3 events. Like intervention often happens multiple times and then it's all over and the bank capitulates. But I think I've done that 3 times just with New Zealand. But yeah. Yeah. In a way, you could look at it like yield curve control. Like, what do you think the Bank of Japan's going to do, Brian, if the yield hits 1% on the 10-year JGB? Central bank will intervene. They've already told us that. They'll push that yield back down. How do they do it? They buy a bunch of bonds. Okay. And if you go back in that history, we were at 120 on the euro Swiss franc for like a year. And then we were at 85 the next day. Ooh, yeah. Or if you go back to Governor Stevens at the Reserve Bank of Australia, there were a couple occasions, like I'll make up numbers, but let's say the Aussie dollar was at 83. There was a time where he came out doing a speech, like maybe a monetary policy speech, like important when everyone's watching. And he said the Australian dollar is only worth 73. But at that moment, it was at 83. So guess what happened next? It was very quickly worth 73. Like it dropped 1,000 bips in a week because the guy in charge of the value said it was overvalued. So there's your verbal intervention. So I'm like, thank you, Governor Stevens. High five, right? Because you make money on that. And then the next meeting, he came out and he said, it's not worth 73, it's worth 63. You're like, oh, I love this guy. Knuckles, right? Yeah. And that's why I got my Governor Stevens tattoo on my belly button, right? Yeah. Yeah. It's great. Yeah. Appreciate it. It was great. So, verbal intervention in that case moved the Australian dollar by 2,000 pips. Yeah. Well, it's the same as merger arbitrage, because soon as you know there's a merger on the table, the the market price will change. So if Microsoft is going to buy Blizzard, take over the entire company, and the stock is trading at 85, but Microsoft offers $100 a share, guess what happens? The next day, Blizzard is trading at $100 a share because that's the new price. That's what it's worth, according to Microsoft. So that premium becomes the reality. So that's why if you're I don't know, Bud Fox, you want to own those shares before everyone else knows the offer price, right? And I never understood that movie. Maybe it's ethics or morals or something, but I never understood why that was actually insider trading. I mean, okay, when he was walking around, when he bought a cleaning company and he's going through files, okay, that's insider trading. But why is it illegal for you to follow an investment banker around New York City on a motorcycle and watching him eat lunch to figure out who he's having lunch with? Oh, he's meeting with a bond shop. What would he need that financing for? Where does the jet plane go when he leaves? Oh, it's going to Pennsylvania. Oh, what's over there? Oh, it's a steel company, right? Like I always thought like that's actually good intelligence. Why is that insider trading? But I guess it was the other stuff. I don't know. But I always thought that that was actually good. But that's me. I don't know. So we get our information from QuantBox. QuantBox gets its information directly from the government or other agencies or other providers. And we're just well informed. We're well informed and we're watching money move around. So I'm very grateful for that. And I like the pretty colors. What can I say? Yeah. Yeah. So, anyways, I got to go. Busy day today. Lots to do, lots to trade. I'm pulling for peace. I'm pulling for peace. So, peace on earth. May the pips be with you. May your profits be above average. I'll see you soon.